Okay. I want to welcome everyone to Get Ready, IRS Filing Season Awareness. We are thrilled to have this presentation for you today. This is the first time for this district, and we're really happy to bring it to you. Both Odette and Nancy from the IRS have a lot of information to share with you. I'm going to start and talk a little bit about SCORE as we get things going. SCORE does two important things. One is training. Training comes in the form of webinars and workshops. We do have a few in-person workshops that we have been adding in this new year. We do have a lot of great new topics, so I definitely encourage you to watch for the newsletter and for to check out the website. The most important thing that SCORE does, however, is mentoring. Our mentors are volunteers that have experience and knowledge that they want to share with you. They work with folks that are at all stages of business. We work with those that are in the process of deciding if small business ownership is meant for them. We work with folks that are in the planning stage. We help them get everything, make sure they're covering all their bases. We work with folks that are already in business. We help them with growth plans. Maybe they're having difficulty with marketing, finances, whatever the case may be. We have a mentor for pretty much every business topic that you can imagine. SCORE is a national organization, so we do have the ability to go from the chapter level to the district level to the national level to get the answers that you need so that your business is successful. You do not have to have a business license before you come to SCORE. There is no requirement. We do like to look, and we like to work with folks early on in the process to make sure that they're not missing anything before they start putting more funds out into the world. If you were interested in a mentor, you can put a note into chat and we'll make sure the right chapter reaches out to you. You can also go to the score.org website, and there's a little space to put in your zip code, and they will connect you to the right chapter right away, and you can put that request in. I'm going to put our chapter websites into the chat here shortly. I encourage you can get a mentor that way. I encourage you to also look through the templates and tools. There's lots of templates you can download, blogs you can watch, all kinds of information that you can dig through about business. We are recording today, and we will get that recording posted, and I will let you know where that will be posted in the chat here shortly. And we will be sending out the handout to a handout version of the slides to attendees today. We are using the raised hand as an unmuting tool. If you have anything that you need addressed, please go ahead and put that into chat for us. We are going to use the Q&A for questions that you want asked to the presenter. We do have a lot of people on the call today, and we don't want to miss your questions. So please use the Q&A tab. You'll find it on your Zoom bar, and those questions will be asked to our presenter. We're gonna hold them to the end to make sure we get through all of the material. I do see we have a few hand raised. If you could just please put your comments into chat for now, we would appreciate that. Okay, I want to go ahead and introduce Odette and Nancy from the IRS. It's all yours. Thank you.
Thank you, Teresa. My name is Nancy Feliciano, and I'm here with my colleague, Odette Turin. I'm actually located in Hartford, Connecticut, and Odette is located in Rhode Island. And we are here with the IRS Stakeholder Liaison office. So we appreciate the opportunity to share some information with you, including updates about the filing season and information that you might find helpful to get you ready for this filing season. Next slide. On this slide, you see our contact information for myself and Odette. Like I stated, I'm in Connecticut, and Odette is in Warwick, Rhode Island. So both myself and Odette are available to assist you. And please feel free to reach out or contact either of us. So let's look at some of the topics that we're going to plan on discussing today. Thank you, Odette. This is our short agenda. We have disclosure basics. We're going to cover some of the filing season awareness and updates. And we're going to talk about record keeping and also estimated tax payment. So please feel free to ask any questions as we go along. You can put them on the Q&A chat. Next slide, thank you. Okay, so before we start the presentation, you should know that the Internal Revenue Code, or the IRS law, provides that tax returns and return information are confidential and are not subject to disclosure, except in the limited situations defined by the Internal Revenue Code. So in identifying types of authorized disclosure, Congress attempted to balance an agency's needs for the information with the citizens' right to privacy, as well as the impact of the disclosure upon continued compliance with the voluntary tax system. So in short, Congress undertook direct responsibility for determining the types and manner of permissible disclosure. So the law specifically prohibits IRS employees and others, including state tax agencies employees, who work with federal tax data from disclosing tax data unless the law provides the disclosure. So therefore, tax returns and returns information are strictly confidential. So this prohibition against making any disclosure is known as the disclosure rule. And at all times, we are responsible for safeguarding tax and other sensitive information from unauthorized accesses and disclosure, because the law makes the confidential relationship between the taxpayer and the government quite appears. So by the simple act of filing a tax return, a record is recreated, and also a public trust that the information contained in that tax return will remain confidential. So we are responsible for maintaining both. So it should be noted that currently there are no agreements to share information with U.S. immigration or customs enforcement agencies in the IRS. Next slide. Okay, so let's begin with some filing season reminders. Next slide, please. So the 2023 tax filing season officially opened up on Monday, January 23rd. And that's when the IRS began accepting and processing 2022 tax returns. So more than 168 million individual tax returns are expected to be filed. So the IRS strongly encourages people to file their tax returns electronically to minimize errors and get their refunds faster. So with the three previous tax seasons dramatically impacted by the pandemic, the IRS has taken additional steps for 2023 to improve the service for taxpayers. So as part of the August passage of the Inflation Reduction Act, the IRS has hired more than 5,000 new telephone assistants and added more in-person staff to help support taxpayers. So while with much work remains after several difficult years, we expect people to experience improvements this tax year. Next, please. So April 18th is the tax filing deadline for most taxpayers. The filing deadline to submit your 2022 tax returns or an extension to file and pay your tax is Tuesday, April 18th, 2023 for most taxpayers. So April 15th, 2023 falls on a Saturday, and Emancipation Day is also Monday on April 17th. So by law, Washington, D.C. holidays, including Emancipation Day, they kind of impact the deadlines for everyone in the same way federal holidays do. So also Patriots Day, recognizing Maine and Massachusetts, is Monday, April 17th. And thus that does not impact the Tuesday, April 28th filing due date. Next. So do you know that you can check the status of your 2022 individual income tax refund 24 hours after you electronically file your tax return? Well, you can use the Where's My Refund tool on irs.gov. So the Where's My Refund tool will give you a personalized refund date after we process your return and approve your refund. So it kind of tracks the progress through the 2-3 stages. First, when the return is received, then when the return is approved or the refund is approved, and when the refund is sent. So to use the Where's My Refund tool, you need to provide your Social Security number, your filing status, and the exact dollar amount of your expected refund. So the Where's My Refund online tool has been expanded to allow taxpayers to check on the status of their refund for the current tax year, as well as 2 previous years. So now you can actually look up the information for tax years 2022, 2021, and 2020. And this was a change that was made last year. So next, let's look at the free tax filing programs that the IRS has for qualifying taxpayers. So the first program is the IRS Free File program, which is a public-private partnership between the IRS and many tax preparations and filing software industry companies who provide their online tax preparation for filing for free. It provides 2 ways for taxpayers to prepare and file their federal tax return online at no cost. So there's a guided tax preparation that provides free online tax preparation filing at an IRS partner site. So our partners deliver the service at no cost to qualifying taxpayers. So taxpayer whose AGI or adjusted gross income is $73,000 or less qualify for a free federal tax return. We also have the free file fillable forms, which are electronic federal tax forms, kind of equivalent to a paper 1040 return or form. So you should know how to prepare your own tax return, be able to use instructions in IRS publications to use this free fillable form. So it provides a free option to taxpayers whose adjusted gross income is greater than the $73,000. You can find this information on irs.gov. So now next are some free tax preparation options that you can use in assistance in preparing your tax return. So you may qualify to have your tax returns prepared for free if you meet certain income or age requirements. So the first option is the IRS Volunteer Income Tax Assistance Program, commonly known as the VITA program. So the VITA site offers free tax help to people who need assistance in preparing their own tax returns, including people who generally make less than $60,000, people with disabilities, and limited English-speaking taxpayers. So in addition to VITA, the tax counseling for the elderly, which is TCE program, offers free tax help as well. So particularly to those who are 60 years of age and older, specializing in questions about pensions, retirement-related issues unique to seniors. So another option is the AARP Tax Aid program. So on this screen right here, you can see the IRS webpage with a locator tool where you can find a VITA, TCE, or AARP Tax Aid site near you. So the VITA, TCE, or Tax Aid assists taxpayers in preparing their tax returns at no cost. Next slide. So on that same page, if you scroll down, you can see the links to the VITA, to the TCE, and Tax Aid locator tool. So you can just click on the link to find the nearest free tax preparation services location, and you can use the web address shown on the slide for or www.irs.gov/VITA, or you can actually Google IRS VITA sites, and that way you can also locate the nearest VITA sites. In many cases, you may want to find a tax professional to prepare your tax return. So now let's look at some tips of good record keeping, and I'm going to turn it over to Odette to cover that. Odette?
Thank you, Nancy. Can everyone hear me okay?
Yes.
Excellent, excellent. Nancy, thank you so much for some great information on some filing season tips. So really great to share that information. So what we're going to be talking about now is some business record keeping. So everyone in business needs to keep records. Keeping good records is very important to your business, and good records will help you in several ways. First, it's going to help you monitor the progress of your business. So you need to keep good records to see how your business is doing. The records can show you whether your business is improving, which items are selling, or what changes you need to make. Good records can increase the likelihood of your business success, so it's really important. Good records will also help you prepare your financial statements. So sometimes you might need financial statements like a profit and loss sheet or a balance sheet that you may need for your bank or creditors. So keeping good records is going to help you prepare those financial statements that you will need. Good records are also going to help you identify sources of receipts. So you'll receive money or property from many sources. So your records can identify the source of your receipts. Sometimes that income could be taxable, sometimes it's not. You'll need the information to separate the business from the non-business receipts and taxable from non-taxable income. Good records will also help you keep track of deductible expenses. You may forget expenses when you go to prepare your tax return at the end of the year, unless you record them when they occur. So it's important to record your income and expenses as they occur. So you know you'll have everything that you need to report and everything that you're entitled to deduct as business expenses as well. Good records are also going to help you prepare your tax return. You need good records to prepare that tax return. So these records must support the income, expenses, and credits that you report on your tax return. So generally, these are the same records that you use to monitor your business and prepare your financial statements. So again, good record keeping is going to help you in so many areas. And the last bullet on the slide, good records will support items reported on the tax return. So you need to keep good business records available at all times for inspection by the IRS. So if the IRS examines any of your tax returns, any of the items on the return, you may be asked to explain those items that were reported on the return. And a complete set of good records will speed up that examination, that inquiry into the items on the return. So record keeping, really important. So let's look at record keeping systems. So you can choose any type of record keeping system that's suited to your business that just clearly shows your income and expenses. So it's up to you what you want to do. The business you're in may affect the type of record you need to keep for federal tax purposes. The main thing is that your record keeping system should include a summary of your business transactions. So this summary is ordinarily made in your business books, for example, your accounting journals, your ledgers. Your books must show your gross income as well as your deductions and credits. So for most small businesses, the business checking account is the main source for entry in the business books, where you're going to be depositing your income, where you're going to be writing your checks for your expenses. So the system you use to record business transactions will be more effective if you follow good record keeping practices. So it's important to record expenses when they occur and identify the sources of those income and expense items. So generally, it's best to record transactions on a daily basis. If you keep it going on a daily basis, it's going to be much easier to meet all of your requirements, whether it's payroll reporting, whether it's your returns at the end of the year. Much easier if you record all your transactions on a daily basis. So for additional information on record keeping systems and how to record your business transactions, we have a great publication. It's publication 583. It's called Starting a Business and Keeping Records. Has some great information on record keeping and record keeping systems. So a record keeping system for a small business might include some of the following. So as I mentioned, your business checkbook, a summary of cash receipts, both daily and monthly. You could have a check disbursements journal. You could have a depreciation worksheet if you have business assets that you're keeping track of. Your employee compensation records, and we'll talk about employment records in a moment. Now, some businesses may choose to do something very simple, like a checking account, and use it that way. They could be more involved and have like a full accounting system that has cash receipts journals and ledgers. Or they could do something very simple, like, well, you have things in a black book. You just have something that you're recording everything in. And many businesses, especially small businesses, may choose to use electronic accounting software or some other type of electronic system to capture and organize their records. So some small businesses might use things like QuickBooks or Peachtree or FreshBooks, and that's perfectly fine, where it incorporates everything. It incorporates when you write a check, when you make a deposit, and has things for keeping track of your income and your expenses. So something like electronic software is great, and maybe something that would be helpful to you. So a note on electronic records. So it's important to note that all requirements that apply to hard copy books and records also apply to business records, which are maintained using electronic software or point of sale software or financial software or any other electronic record systems. That electronic system must provide a complete and accurate record of your data that's accessible to the IRS. So, for example, QuickBooks is going to have that. But also you need to have supporting business documents, not just your electronic software. You are also going to need to have supporting business documents that are going to show all the support for your income and expenses. So let's take a look at some of the supporting business documents that you might have for your business. So first off is that business checkbook. So one of the first things you should do when you start a business is open a business checking account. You should keep your business account separate from your personal checking account. You don't want to commingle business and personal. Use the business account for business purposes only. The business checkbook is your basic source of information for recording your business income and your expenses. You're going to indicate the source of deposits and the type of expenses in that checkbook. You should deposit all your daily receipts in that business checking account. And you should check your account for errors by reconciling it monthly to make sure that that business checking account is where it should be. Little hints like using a checkbook that allows enough space to identify the source of deposits as business income, personal funds, or loans. You should note on the deposit slip the source of the deposit and keep copies of all the slips. Again, this is all going to help you in explaining and documenting what your income and expenses are for your business. You should make all payments by check to document business expenses. You should write checks payable to yourself only when you're making withdrawals from your business for personal use. For example, if you were a sole proprietorship, avoid writing checks payable to cash. If you must write a check for cash to pay a business expense, you have to include the receipt for the cash payment in your records. So just having a check out to cash isn't going to be good enough to substantiate that expense. Okay. Supporting business documents. So your daily business transactions will generate supporting documents such as invoices and receipts, just as you go about your business that you're going to have. You're going to send invoices to your customers. You're going to get receipts for expenses. Those are all part of your supporting documents. So they could include things like sales slips, paid bills and invoices, receipts, deposit slips, canceled checks. Those are all part of your supporting documents. It's important to keep these documents because they support the entries in your books and on your tax return. You should keep them in an orderly fashion and in a safe place. You should organize them, for example, by year and type of income or expense, just so it's easy for you to access them. Again, great information in that publication 583, Starting a Business and Keeping Records, gives you some great hints there. So gross receipts, what kind of documentation would I need to support for gross receipts? So gross receipts is the income you receive from your business. So documents for gross receipts could include cash register tapes, bank deposit slips, if you have a receipt book, if you have invoices that you send to your customers, credit card slips. 1099 miscellaneous. You may be in the type of business where your customers issue you a 1099 miscellaneous. So you want to keep that as part of your documentation for your receipts for your business. So purchases are items that you buy and resell to customers. So if you were, let's say, a store and you were selling things, if you're a manufacturer or a producer, this includes the cost of raw materials or parts purchased for manufacture into the finished product, or if you are a retailer, your inventory, those would be all part of your purchases. So documents for those would be, how did you pay for them? If you paid for them by canceled check, if you had cash register tape receipts, for example, if you purchased expenses at Staples, for example, office supplies for your business, you would not just need your canceled check or your credit card receipt, but also you'd want to keep that cash register tape that shows what it is that you purchased. Now, other expenses that you may incur, other than like purchases, would be anything to carry on your business. So for those documents, you should identify the payee, the amount paid, the date incurred, and a description of the item that was purchased. So many times, when you go to buy something, if you go to Staples, that cash register receipt is going to explain what it was. Canceled checks, account statements, credit card receipts. Those are all part of your documentation for expenses. So assets are things that you have in your business that have a life beyond a year. So they could be machinery, equipment that you own and use in your business. So these, for these assets, you have to keep records to verify certain information about those assets. You need to keep those records so you can compute the annual depreciation that you can take each year on them, and then the gain or loss on when you sell the assets. So the types of things that you should keep for assets, you can see on the slide there. The purchase price, if you made any improvements to it, when you acquired it, deductions for depreciation, how you use the assets, and if you disposed of it, what was the selling price and the expenses of the sale. So things that would document an asset would be invoices for the purchase and sale. If it was real estate, any real estate closing statements, any canceled checks or other documents that identify the payee and the amount. Also, if you secured a loan to purchase those assets, you want to keep all those loan documentations as well. So employment records. So there are specific employment records that you need to keep. So if you are an employer and you have employees, you need to keep all records of employment for at least 4 years after filing the fourth quarter for the year. They have some information in publication 15, which is the Employer's Guide, Circular E, for the Farmer's Tax Guide, publication 225, and IRS.gov has a lot of great information, and just employment tax record keeping, if you search that, you're going to get some great information there as well. So what kind of records should I be keeping for employment taxes? So you should obviously have your employer identification number, EIN, all information on your employees. So whether it's their names, addresses, social security numbers, any W-2s that were returned as undeliverable, anything that's related to the employment. So things like the W-4s that they signed, copies of payroll returns, and if you have any allocated tips, if you're in a tip industry, on how you did that, dates and amounts of tax deposit made, all things related to you as an employer, the types of records you should be keeping. Okay, so over the next few slides are some great IRS resources for small businesses and record keeping. We have a lot of great information available on IRS.gov. Some of the publications here, the first one I mentioned, that Pub 583, great for starting a business and keeping records. and Pub 463. So this goes into expenses related to your business that involve travel or entertainment or gift and car expenses, because some of those have specific documentation and reporting requirements. So that's a great publication. If you happen to use a portion of your home for business use, you may be entitled to business use of your home deduction. So that Pub 587 is great. As I mentioned, the Employer's Tax Guide, that's publication 15 or Circular E. The Farmer's Guide, publication 225, another great publication. On this last slide, we have publication 535, which is on business expenses. It has some information on specific types of business expenses that you may be questioning. Pub 536 for net operating losses. So if you happen to have a loss in your business, that's a great publication because there's some specific requirements in deducting net operating losses. Also Pub 547 on casualties, disasters, and theft, both business and non-business. Pub 594 on the IRS collection process is also a good publication. And you can also visit irs.gov. If you just put in the search box up in the top right, record keeping, you're going to get a lot of great information. And also another wonderful resource on irs.gov is the Small Business Self-Employed Tax Center on irs.gov. Great information for small businesses. A lot of great information there. So at this point, I'm going to turn it over to Nancy, and she's going to talk about some estimated tax payments. So over to you, Nancy.
Thank you, Odette. That was a lot of information that you covered in regards to record keeping. So hopefully everyone was paying attention, taking notes, even though you're going to get this PowerPoint as a handout. So hopefully you have learned how to start keeping good records if you're not already doing that. All right, so now I'm going to cover estimated tax payments. So Odette, can you go to the next slide, please? So the IRS urges taxpayers to check in their options to avoid penalties, especially the estimated tax payment penalty, by adjusting withholdings on their paychecks, or the amount of their estimated tax payments can help prevent these penalties. So this is essentially important for people into the sharing economy, those with more than one job, and those with major changes in their lives. So like a recent marriage or a new child. So the IRS has a new pay as you go, so you don't owe page on irs.gov to help you make sure you have enough tax payments during the tax year. So taxes are as pay as you go. So this means that you need to pay most of your tax during the year as you receive your income, rather than paying at the end of the year. So having enough tax withheld or making quarterly estimated tax payments during the year can help you avoid a large tax bill and penalties at that time. Next slide. So like I mentioned, taxes are pay as you go. And this means that you need to pay most of your tax during the year as you receive your income, rather than paying it at the end of the year. So having enough tax withheld or making quarterly estimated payments during the year can help you avoid those large tax bills. So there are two ways to pay tax and avoid a large bill when you file your tax return. First is through or via tax withholdings from your pay. Your pension or any government payments such as Social Security, or estimated tax quarterly payments during the year. So changing your withholdings or making estimated tax payments also help you avoid interest or the estimated tax payment penalty for paying too little during the tax year. So you can avoid the penalty by making sure that at least 90% of your tax is withheld during the year. You can also visit the Pay Online page at www.irs.gov/payments to get more detailed information. Next slide, Odette. So changes in your life can affect the amount of the tax that you owe. So as an employee, you don't have to make estimated tax payments if you have more than withheld from your paycheck. So this may be a convenient way or option if you also have a side job or a part-time business. So the IRS tax withholding estimator is an online tool that helps you determine the correct number to enter on your Form W-4. So when you fill out a new Form W-4, which is the Employee's Withholding Allowance Certificate, you make sure that you have the correct amount of withholdings from your pay throughout a year. So the IRS offers an online application to help taxpayers or help you pay the correct amount of taxes owed. So like I stated before, this is available on irs.gov. Also, IRS Publication 505 is the tax withholding and estimated tax that has a lot of more detailed information that you can always read about. Next slide, please. So check your withholdings often and adjust it when your situation changes. So to do this, fill out a new Form W-4 and give it to your employer. So the tax withholding estimator is a helpful tool for that. So like I stated before, changes in your life as a marriage, a divorce, working a second job, running a side business, or receiving any income without withholdings can affect the amount of tax that you owe. Next slide, please. So some income is not subject to withholding. So this includes income from self-employment, some gig economy activities, or rental activities. So be sure to make estimated tax payments on those sources of income throughout the year. So you may also make estimated tax payments if the withholding from your salary, pension, or other income doesn't cover your income tax for the year. So you make your estimated payments based on the income you expect to earn and any credits you expect to receive in the year. So you can use your prior year tax return as a guide. And you can also use Form 1040-ES, which is the estimated tax for individuals that has a worksheet that can help you figure your estimated tax payment. So you can use estimated tax payments to pay both income tax and self-employment tax, which remember that includes your Social Security and Medicaid payments. Next slide. So your estimated payments are due as follows. January 1st to March 31st, the payment is due April 15th. From April 1st to May 31st, the payment is due on June 15th. June 15th to August 31st, the payment is actually due on September 15th. And September 1st to December 31st, the payment is due January 15th of the next year. So like I stated, you may send your estimated tax payments with Form 1040-ES, or better yet, you can actually pay online by phone or from your mobile device using the IRS To Go app. For that, you can go on irs.gov and visit all your payment options there. So visit irs.gov/payments to view your payment options, such as the IRS To Go mobile app. You can also download this to your phone or tablet. And also we have direct pay that you can use from your bank account transactions, and making sure that your payments are safe and secure payments using your credit card or debit card. So if you underpay your taxes, you may have to pay a penalty. So this applies whether you pay through withholdings or through estimated payments. So a penalty may also apply for late estimated payments, even if you are due a refund when you file your tax return. So in general, you don't have to pay a penalty if you meet any of these conditions. So if you owe less than $1,000 in tax with your tax return, throughout the year, you pay the smaller of these two amounts, at least 90% of the tax for the current year, or 100% of the tax shown on your return for the prior year. So this can increase to 110% based on your adjusted gross income. So to see if you owe a penalty, you can always use Form 2210. The IRS may waive the penalty if someone underpaid because of an unusual circumstance and not a willful or neglect. So examples include if you have a casualty loss, or an individual retire after reaching age 62 during a tax year when estimated payments apply. And also an individual became disabled during a tax year when the estimated payments were applied. So they are special circumstances when you can actually create a waiver of that estimated tax payment penalty if you get charged with a payment penalty. Okay, and the next slide. So we on slide 35, yes. So these are helpful forms and publications that are available for you. We have publication 505, which is the tax withholding and estimated tax publication. Form W4, employees withholding allowance certificate. And also the form 1040 ES, which is used to make estimated tax payments. And the form 202210 that you can use for the underpayment of estimated tax, estates and trusts. So all these publications are available to you on IRS.gov. So I think on the next slide, okay, so I think we're done with our topic. So we're gonna open it up for questions. And I know that we covered a lot of information. So now it's time for questions. So
I do have questions, Nancy, no doubt.
Okay, go ahead.
Yeah, the estimated tax due dates that you showed, are those for personal or business taxes?
Those are for personal taxes.
But if somebody were a sole proprietor, that would apply for them.
Yes, because the sole proprietor files a Form 1040 with your Schedule C and SC. So those due dates also apply for a sole proprietorship or if you have self-employment income.
Great. What if you don't have a social security number because you're not a U.S. resident?
If you don't have a social security number and you have income and you are required to file a tax return, you can always apply for an individual tax identification number, which is an ITIN, by using Form W7. And you can find this information on IRS.gov. There are instructions to fill out the Form W7. You have to make sure that you follow the instructions, make sure you use the current revision for the form. Also, you have to make sure that you include that Form W7 with your tax return and mail in the necessary documentation.
Excellent. If you have an LLC registered, but you've had no financial transactions at all, no revenue, no employees, do you still need to file a tax return?
Okay, you want to take that one?
Sure. So
I give you the hard ones.
So generally, if you set up an LLC, it's an anticipation, it's a limited liability company. So the anticipation is that you're going to have some sort of activity, some sort of business activity. So generally, you probably would want to file like a tax return for that. Sometimes you could have startup expenses as well. So the general rule is, when you set up that LLC, if the intent is to have a business, when you do that, again, you would be filing, the LLC is required to have an employer identification number. So when you fill out the employer identification number, whether you do it online or by paper, and you get that EIN, on that, you're going to indicate what type of business entity you are. So when you do that, you're going to indicate, okay, I'm a sole proprietorship, or I'm in the case of an LLC, or I'm a corporation, or I'm a partnership. So then the IRS is now going to be looking for that filing because you've indicated, I have an EIN because I'm a business, and an LLC is generally going to have an employer identification number. So the IRS is going to be looking for a filing. So generally you would want to have a filing, even if you haven't quite started the business yet, if that makes sense.
Yes, that's great. Thank you. How are quarterly taxes calculated, and would it be cheaper to pay quarterly as opposed to annually?
Well, like I have mentioned before, to avoid a penalty, you can make your estimated tax payments quarterly. So that makes it easier for you to cover your 90% of your tax balance or the amount that you're going to owe to avoid an estimated tax payment penalty. So sometimes if you have withholdings through your salary, they're going to be withheld automatically. So you don't have to worry about making any estimated payments. So hopefully that answers your question.
And if I could add too, if you do have, let's say you do have a small business, you have a sole proprietorship, and let's say you also, either you or your spouse on a married filing joint return also have wages. So if you have W-2 wages, you could also, through your employer, increase your withholding to cover other income, including like that small business income or any other type of income that's not just related. So you could say, take out another $50 a week. And that's another way of getting additional withholding in. But if you don't have that means, or you can always, as Nancy said, do estimated taxes. So it's not a matter of, is it, cheaper? It's just a matter of you have to get your withholding in. Uncle Sam, as Nancy mentioned, our system is pay as go. So Uncle Sam doesn't want all his money at the end of the year. He wants it throughout the year. So when you have withholdings, that's a great way of spreading out that. But if you don't have that means, for example, you're a sole proprietorship, you need to do that quarterly estimated tax to get that in.
Okay. If you have converted from a sole proprietorship to an LLC, do you need a new EIN? Do you know?
I don't believe so. I'd have to check on that.
Yeah, well, it also depends if you are doing an LLC as a sole owner or as a partnership or so, but they are on IRS.gov under EIN in the EIN page. And I think Odette is going to look for it and probably put a link there. You can actually see there's an entire section if you need a new EIN. So in that section, you're going to actually find your answer if you need a new EIN when you open a new business or if you're just changing it over. So that on that page, we'll find the answer for a particular question.
So if I could chime in there. So I am looking at that reference that Nancy mentioned. As a sole proprietor, you will be required to obtain a new EIN if you incorporate. So if you incorporate, then you're going to need to have a new EIN. If you take in partners and operate as a partnership, you'd also need a new EIN. You'll not need a new EIN if you are just changing the name of your business, changing the location, or you operate multiple businesses. So hopefully that answers that.
Yeah, that's great. Okay. Are there examples on the IRS website on how to fill out forms properly? For example, for an annual tax reconciliation?
So I'm not sure what's meant by an annual tax reconciliation. Not really sure what they're referring to there. I don't know if someone could put in a little more detail on what they're referring to. If they're referring to just in general forms, most of our forms have instructions on how to complete those, if that's kind of what they're looking for. So I'm not sure if they could either come off mute or put something else in the chat or the Q&A.
Okay. Yeah, I think that it seems to answer the question, but if it doesn't, they can let us know. If I'm a single entity LLC, I believe I filed a Schedule C. You said I need an EIN. What do I use as an identifying number? A social security number or EIN?
So if you're an LLC, LLCs are state entities. So they're established by the state. And they're a limited liability company. So if you can have a single member LLC, meaning you're the only one, or you can have 2 or more member LLCs. So for tax purposes, there's not like an LLC form. So the classification of how that LLC is going to be treated for tax purposes depends on a couple of things. And the most important is the number of members. So if you're a single member LLC, you have a choice of either being taxed as a corporation or as what we call an entity disregarded as separate from its owner, which is usually a Schedule C. So that single member LLC can either be a Schedule C sole proprietorship, or it could be taxed as a corporation. If it's a 2 or more member LLC, then you can't be a sole proprietorship, right? Because 2 or more members, you can't have more than one. So a 2 or more member LLC, the choices for federal tax classification are going to be a partnership or a corporation. And in either of those cases, if it's eligible and it wants to be taxed as a corporation, if it's eligible, it could also be taxed as an S corporation. So in all of those instances, you really need to have an EIN.
Okay.
Also, Odette, I wanted to add that with the LLC, you have to elect that by using Form 8832, which is the entity classification election when you set up an LLC.
Yeah, thank you, Nancy. That's great. There is a default classification. So if you don't send in that 8832, there's a default classification. So the default classification for a single member LLC is an entity disregarded as separate from its owner. So if you set up an LLC and you don't file that 8832, when you go to file your employer identification number form and you put in LLC and you don't indicate that you want to be taxed as a corporation, the default classification for a single member is going to be an entity disregarded as separate from its owner, the Schedule C in our example. For two or more members with an LLC, the default classification is going to be a partnership. So if that two or more member LLC wants to be taxed as a corporation, then it's going to need to file that 8832 and elect that classification. And you can switch, by the way, too. If you decide one way and then you can, in another year, you can switch.
Okay.
Thank you, Nancy. Great.
Can the W-7 form that you talked about be submitted online?
Which form was that?
W-7.
Okay, the W-7 cannot be submitted online. And the reason for that is because the form W-7 has to go in attached also or included with your form 1040 when you file your tax return. Also, we need documentation to verify your identity. For example, if you have a passport, the passport is a standalone identification. So we need to actually see your passport and verify that identification ID. Or if you don't have a passport, there's other identification forms that are included with the Form W-7. So as of right now, you cannot file the Form W-7 online or electronically. You can go to the IRS office, you can make an appointment, you can walk in with your 1040, your W-7, and your identification paperwork, like the passport or any of that documentation that you have, and the IRS will verify that information right there and send in your W-7. Or you can actually go to a certified acceptance agent that are located throughout the states too. They also provide the service. Or you can mail it in, but you're going to have to mail in your original documents.
I'm seeing several questions about an estimated tax portal or paying taxes through a tax portal. Is there a tax portal that people can pay through?
You can actually, there are a couple of payment options that you can use. You can actually use the electronic federal payment program that we have. You can make any source of payment. You can make your regular payments there. You can make your estimated payments there. You can actually use the direct pay online. You can actually make payments on if you have an online account, you can actually make payments through there. You can mail in your payments by using the 1040 ES and using the coupon that's on that form. So there's a few ways that you can make your payments. You can also make an appointment at an IRS Tax Assistance Center and also make payments there.
Okay.
So if you go on irs.gov, as Nancy had mentioned earlier, and you just type in payment options, you're going to come to the web page for payment options, and it's going to have links to all of the options that Nancy mentioned, and also a link for paying by credit card or digital wallet. That's another option too. So the IRS is happy to take your money, and we're going to give you a lot of options to do that.
Also, the IRS To Go app that you can download on your smart device or your tablet. You can actually use that IRS To Go app and also make payments through there.
Okay. I think this question is going to have to go to an accountant, to a personal accountant, but I'm going to ask it anyway, because I know a lot of people have this question. If you use a Square or another payment type service to collect, like for cookie sales for a Girl Scout group, and the 1099 comes to you, but it was really collected for the Girl Scout group, is there a minimum or maximum allowance to not add it on your own personal tax reform form, or how does that work? Do you have any feedback on that?
So not in particular to how the Girl Scouts do that, how they issue that. But if it's things like with the 1099-Ks, there is a lot of concern over that. In terms of if there are online payments and how those payments are made. I'm not sure if they're referring to that or to 1099 miscellaneous or NEC, non-employee compensation. So I think that's something very specific. As you mentioned, it's probably best to check with your accountant on that.
Yeah, I can actually throw a little bit in onto that. I know somebody who has a similar situation. And yes, we worked with our accountant and we were able to put it through as a hobby because it did come through on our name versus the nonprofit. But you definitely need to talk to an accountant to get that squared away correctly. Is there a fee to pay by credit card?
Some credit card companies will charge their own fee. Those are not IRS fees. Those are fees that the credit card company charges. So there might be a fee if you use a credit card. Yes.
So if you go to irs.gov and you click on pay by credit card, it's actually going to come up, and it's going to come up with fees by the processor that's going to have on there. So paying by credit card, for example, Visa, MasterCard, Discover. Right now they're showing that it's like a 1.85% with a minimum of $2.69. So obviously that's going to be changing. So you want to go to that payment options on irs.gov and scroll down for credit card, and you'll get all the information, like if you're paying that way.
Okay. There's a question about 501c3s and money that was collected not through the organization as well. That's definitely going to be something you're going to want to talk to your accountant about.
Yeah, the 501c3s are a tax exempt organizations. So we do have, a lot of good information on tax exempts. If you go to irs.gov, right at the top, you're going to see a link for charities, and there is charities and nonprofits, and you're going to see a lot of information there. But definitely a very specific area within the tax law. So you can check irs.gov to kind of familiarize with it, but definitely seek the advice of your tax professional.
Okay, I have a question on sales tax. You'll want to check with your state on that one.
Correct.
Yes.
Sorry, I'm just kind of making sure I haven't missed any questions because we have so many. As a business owner, are there any free tax filings? Can you get the same assistance as with personal taxes?
So Nancy mentioned some of our like our VITA sites. Some of them will do small Schedule Cs, for example, just like a 1099 type Schedule C. Some of them may do that, may assist with that. So that's something you'd really want to check on irs.gov on the VITA site to see what kind of assistance they do. But again, that would be very small. If they do that, it's going to be very small. So most of them are going to be specific to individuals.
Okay.
Nancy, did you want to add anything to that?
No, that was great.
Oh, okay.
I do have some questions about different entities. I actually strongly encourage you to get onto the SCORE website. We actually just did a webinar on this. There's a lot of great information there describing the difference between the different entities and how they work. So please check that out. Do I need to make estimated tax filings if I have no income?
If you have no income to report,
yeah, do you need to do estimated filings quarterly if you have no income?
No, if you have no income, then you're not required to even file a tax return. Okay. So estimated payments are for, if you're working and you're on the withheld, then you can adjust your withholdings. If you have any other income that's not subject to withholdings, let's say like Social Security, or even if you win the lotto or something, you got to make sure that then you make estimated payments to cover that. But if you have no income, then you're not required to make any estimated tax payments.
Okay. I have a question about converting an LLC to a 501c3. Definitely, you're going to want to talk to somebody at SCORE about that. a 501c3 is not owned by an individual, because it's owned by a board or it's a nonprofit. So you would want to talk to somebody about how all those things would interact. Let me see, have I missed anyone? Let me see. I'm going to kind of go through the chat. There was a couple that went through chat as well. We are recording. I will send you this recording and the handouts so that you can go through that information again. Yeah, I think I've caught everything. If we have not, please definitely reach out to SCORE. We can connect you to our contacts at the IRS if needed. Or, we also have folks at SCORE that can answer a lot of these questions as well. Thank you, Odette and Nancy, for your time today. We have hit the 1 o'clock hour anyway. So we want to thank you for partnering with us on this presentation. Yeah, and we want to thank you for allowing us to join you today, the SCORE from Massachusetts and Rhode Island. And hopefully you came away with some good information to help you prepare for the upcoming filing season and ways to avoid any penalties or good record keeping. So just make sure on the next slide we have our contact information again. Just want to make sure that if you have any questions, please feel free to reach out to either Odette or I, and we're here to assist you in anything that you might have. So. Okay, great. Thank you very much. Thank you, everyone. Have a good day. All right. Thank you. Thanks again. Take care.